want to bring in an industry veteran into this conversation to discuss the car glut that we are seeing thanks to the pandemic. Joining us right now is Mark Fields, Senior Advisor at TPG Capital and former CEO at Ford. Mark, it's great to see you. You heard the report that Phil just brought us. You think about the glut that's there. You think a little bit farther out. You're now in the investment business. Would you be investing in one of the automakers?
Well, I think, when you look at the market, listen, it's always good to buy low than buy high. The bottom line is when you look at the long-term market, you have to look at it and you say, listen, people might think of a personal vehicle going forward as almost like personal protection equipment, almost like a mask, because they're able to control the hygiene in that vehicle. And, people will be less reticent to or less wanting to go and take a plane or commute to work in a train or a bus. And so when you stand back and you look at that, you say, well, it's going to be tough. The market's going to be down. But the bottom line, the demand for transportation over the long term is going to continue to be robust as the world comes out of this, and particularly around developed markets.
What are you seeing around the world, and is there any model we should take away from what's happening in China in terms of what was a deep demand problem, clearly, that seems to have come back a bit? The U.S., I think, seems to be faring better than that thus far.
Yeah, everybody says, let's look at China and see what that means for the rest of the world. You're already seeing some differences. Obviously, in China, the first month of this pandemic, sales were down about 80%, and then snapped back to a certain degree in the last month. Here in the U.S., we didn't see in that first month as deep a fall in demand. It was only about it was about 50%. So we may see it less, but maybe a little bit longer. In addition, when you look at China, when you look at production and getting vehicles to customers, it's a little bit different, because here in the U.S., for the U.S. auto industry in particular, you have a patchwork of orders. And as these plants try and come up, and you just heard FCA is announcing they want to come up May 18th, when you have 40% of your parts coming from Mexico, which right now has a lockdown until May 31st, the U.S. industry is not going to come back up if you have government orders that are different across the patch. They have to be in sync. And that's what the automakers are working through right now.
Hey, Mark, it's Phil LeBeau here.
Phil.
Good to see you again. Two questions for you. First of all, you and I have talked about this many times. The time to buy into the auto industry is in a recession, and you buy those stocks knowing that you're going to come back on the other side. Would you get into these auto stocks at these levels right now if you were an individual investor? And two, we typically see a shakeout in terms of mergers and acquisitions during a recession for the auto industry. Do you expect to see more of that this time around?
Well, when you look at investing, I think from an investing standpoint, actually the best place to invest in times like these is in the supply base. I think you're going to see a number of consolidations in the supply base, particularly as some of the weaker ones that are going to need liquidity going forward. So I think the supply base is the area to look at. And in terms of consolidation, as I mentioned, in the supply base, we'll see some consolidations, because keep in mind, suppliers going forward are actually going to have to keep more inventories and tie up more cash, because you're going to see a little bit of fits and starts in terms of how the plants come back up. But also, with this virus being around with us for a while, in any given time, if you have an employee in your plant that has the virus and that line has to shut down for a few days, you still have commitments to your automakers to deliver just-in-time delivery. So with those kind of things and lower productivity, because you're going to have the social distancing protocols that are going to have to take into account into the plants. You're going to have higher absenteeism for the near term, because you're going to have older workers potentially that may not want to work, or people that have school-age kids that aren't going to school. You'll see some consolidation there. I believe you'll see some consolidation in the retail network. Those dealers that are very strong, particularly in terms of an online presence, that'll become an expectation going forward. And then, finally, from an OEM standpoint, I'm always a little reticent to predict a consolidation. I don't see it, but I think if we do, it's more likely to happen with OEMs in the same country. And the reason for that is because these are national champions, and you get political aspects, you get, union aspects in there, and it's quite difficult.
Hey, Mark, two other questions. Tesla stock, we were talking about Elon Musk earlier this morning because he just crossed this threshold mark for his compensation with the stock staying where it is. Does it make sense to you?
Well, listen, their board decided that that's the way they wanted to compensate him on the stock price. And, the stock price has reacted, so he gets his payday. But again, when you look at the Tesla business model and the Tesla business, listen, a lot of that stock is retail owners, and they buy into the future that Elon has painted for his business and where his business is going. And he's been rewarded for that. And that's what his board has decided how they're going to compensate him.
Right. And then the last question I just want to ask you is about dealerships. In part, the segue is I was thinking that the Tesla, of course, doesn't or owns its own dealerships as opposed to mom and pop dealerships, small business dealerships. What do you think the future of the dealership model is going to be? How many of them do you think get hit in this? You might recall just even 2 weeks ago, AutoNation took the PPP loans for all sorts of its shops, then ended up giving it back. But there's lots of other smaller dealerships that clearly need the money.
Yeah, you will see some level of consolidation in the dealerships. And every automaker, what we saw in the great financial crisis, for example, at Ford, we reduced our dealership count by about 25%. But keep in mind, when you look at the dealerships across America, yes, you have a number of dealers, obviously, in urban areas, and I think you'll see more consolidation there. But you have a number of dealers in rural areas, and those communities actually rely on those dealerships, particularly selling trucks and commercial vehicles and things of that nature. So I think if you do see consolidation, it'll be primarily in the urban areas where customers can still have access to dealerships, and the dealerships can take advantage of bringing their costs down through synergies and things of that nature. But in rural areas, I think you'll see less of that because of the fact that the manufacturers, the automakers, really want to make sure they have that market representation in those important markets.